What's happening, guys, and welcome back to another Sunday Scan. We have a ton to go over in Scan today. We're going to have Judah join us in a few minutes, and he and I are going to share our market thoughts. We're going to share our main watches and go over a lot of different sectors, themes, trends, and strategies. So you definitely want to stay around for the entire episode today. And one of the topics that I really wanted to cover was, how do people still, maintain consistency on the long side while markets are choppy? Because I feel like, especially over the last, I'm sure, year, 2 years, you've had so many people who are newer to markets, come in and participate, and they've done really well by using, trends or momentum or, joining sectors that are running well. And maybe their risk control wasn't the best, but they were still able to make money and do well. And so a lot of those people, they do well until the market changes. And then you basically, if you have a group of 10 people who are doing that, you'll maybe have, one or two kind of stick around and learn the actual strategies that it takes to trade consistently. And a lot of the other ones just kind of will fade out, and they'll lose some money, and they'll kind of say the markets are not for me. So you definitely want to make sure that you're one of those one or two people who stick with it and learn strategies. And we will talk about those strategies later on in the episode. And then something that's really exciting, and we've done this once before last year, is we are going to do a trial at IU. So this is a deal that we run when we have a lot of interest, when the markets are, moving a lot, and people are still on the edge of, should I join Investors Underground? Should I not? And we're just going to make that decision super easy by offering a trial period. So this deal is 2 weeks of access to everything that we have for $49. So this is a super low price to be able to just see what is in Investors Underground. You'll get access to all of the morning broadcasts, the midday sessions, the live trading with myself, with Nate, with Judah, with Stan, and all these other people in Investors Underground. You'll have the best tools, trend scanners, high of day, low of day, AI's new scrapers, and then you have watch lists and everything else. So there's so much value in IU. It's to be able to access all of that for a couple of weeks, and just to see if that is what it takes to, really convince someone of like, okay, this is going to be worth it. And now I know that, as opposed to before when they were just listening to Sunday Scan or watching a few things. They don't even know some of the things that they're missing out on. So there's a ton of value in IU, and this is a way to tap into it for a very low cost. And, if you're looking at how many things you're going to spend $50 on this year, I think that this could be the highest ROI that you will get from that money, because people learn setups, they learn strategies that can go on to provide livelihoods for them, for their families, and it all starts with education and with being around a supportive group of traders who all are doing the same thing to help each other to win. So definitely check out that deal. We will have that linked in the bio. And now let's get on to our discussion with Judah. All right, we're happy to have Judah back on Sunday Scan. Judah, it's been a little bit. Welcome back.
Yeah, it's been a while. Thanks for having me on again.
Definitely. And you were the person who came to mind when I wanted to find a guest for this week, because you are a long bias trader for the most part, but you're able to trade long in all different markets. So I thought that a cool topic of discussion today would be how to really continue to make money on the long side with setups while the market's more choppy. I feel like a lot of new traders have come into this market and they've been able to ride momentum. They found hot sectors, hot themes, and they've just jumped from name to name. And a lot of them can do pretty well. But what happens is that when the market changes, when we start to get some volatility, if you have 10 of those traders, 8 of them will start to lose money, or they'll, give up, or they'll say that the market's not for me. Whereas the 2 or the 1 person who takes it more seriously, who digs into new setups, who learns new things, they're the ones who can be more consistent through all different types of market conditions. And you're able to do that. So could you just, walk us through your market framework of what do you see the market kind of doing? And then how are you personally trying to find setups, and what setups are you focusing on so that you can still make money in this market?
Yeah, so right now, the SPY, so we've been pretty much trending higher since, I should say, November. It's almost been November of 22, right? And we've just been, that was pretty much, where we kind of bottomed out here. And then we just grinded, almost straight up since. We had a little bit of some corrections there, but, now we're starting to break some certain levels. The moving averages are rolling over. We're having some decent distribution on the selling side. The past month now, and now we're just cracking these key levels. And I mean, there's levels I have in mind in case we continue to roll over, and generally these are the environments that it's probably best to sit out for. And I mean, you can, but I mean, I'm trying to continue to trade, and whether that's less size or less risk, then that's what I'm keeping in mind. But generally, what I've been looking for is kind of names that have pulled back after a kind of big move, and there's different types of pullbacks, but it's generally things like on the quantum names, for example, we get these kind of big moves, and then we get this pullback, and the volume's decreasing day by day until we hit a moving average or a key level in the past. And then as it takes out that prior day's high, I like to get involved, and I use, if pretty much that the high of daybreak is pretty far from low of day, then I'll adjust either the risk or the stop level. But I generally like to take it there, and then either it continues on for a few days or it drops off. And I mean, we have seen these a lot with a bunch of these quantum names lately, and it probably does work best with hot sectors and themes, which we've had tons of. AMPG was another one. We had this massive move. We just every day the volume's just getting lower and lower until we tighten up and hit this moving average, and then we get that break of the prior day, and it continues to the upside. And I mean, we've seen this time and time again. QUBT was another one back here where we get that huge move every day. The volume dries up until we put in this little inside candle at the moving average, and then we gap up higher. And I mean, I've just been seeing this over and over again. At the same time, you might even get some continuations that you're familiar with, whether it's a breakout or even a gapper, and they may not go as far or be as strong, but you may still have these names that do it. And this was Friday, where we had this gapper on that news, and as it broke up through the opening highs, I mean, it just made a pretty decent move. So those may still come, and it's probably going to be on the bigger names and the realer names rather than smaller cap biotech that's sub $5. So things are going to have to change in terms of like what you could take, because the past month you were able to take a lot of things and they worked out. We had robotics, we had really just a bunch of names relating to quantum and the space sector. I have it all here: nuclear, quantum, crypto, drones, space. It was just really anything that you took. They were basketed. And I mean, for the watch this week, I mean, I still have some of those, which we could touch up on.
Yeah, and then even a name like IRBT, that kind of fits the bill for what I see you describing, how you have these themes or these names that are kind of trending, and they go through periods where they run and then they consolidate, the volume dries up, and then if your thesis is that you think it might have another leg up, then you're basically looking for the lowest point within that trend that you could enter. And so if you enter at a low point, you can have a tight risk on it, and then if it works out, fine, and if not, then you stop out and you have a small loss. But IRBT, and then there's other ones like SCRV in that sector as well.
Yeah, so I mean, one sector that I do see as of now continuing could really just all it takes one day of high volume and big range to kill it. But right now, one sector that I do see continuing is that robotics sector, and IRBT was one that is potentially on continuation watch, because of it's not just like that move it makes. I mean, we could see the volume here. It's the most volume it's gotten in quite some time. And yeah, now we're just pulling back. The volume's decreasing day by day, and we're getting close to this moving average and this, gap day highs. And I'm just looking for that trend, that reversal. SCRV was one that was in broadcast, I believe, or on scan or on watch. And this was the same thing. We get this big move, on higher volume, and then we get this pretty decent pullback. I believe they had an offering this day here, but we bounce. And if it does continue to roll over, I'm not there. I'm not just taking anything that has this type of setup. I want to see it reverse. I want to see a trend. I want to see volume come back in, which it did. And sometimes these things just have to bounce even in the weak market. these tend to pull back when the market may be going up, right? So it's already been pulling back 2-3 days, and now there's two options: either the market stays heavy one day and these stay even heavier and roll over and just really flush out, or it just has that reversal and it gives relative strength, and then the market reverses and this continues. And we've seen this in this name plenty of times. It may seem very subtle, but I mean, if we look at these moves from when they start to reverse, they're 40-50% moves within each reversal. And this actually reminds me a lot of NNE. When I was watching it back here, we get this big grind, and each day this thing pulls back. Once it broke here, I took it. And these are very subtle moves, but they did move 20-30% each time they've done that. So that's pretty much what I'm looking for. That's one of the sectors. IRBT, we got ARBE, which had that big move. This was, I believe, with NVIDIA headline, and then it breaks up through that Thursday high, and now if we start to trend up through those levels, then I'd be interested in GFAI. Another one that just been pulling back. I mean, if we look at these pullbacks too, they're pretty decent pullbacks, 47, 50, sometimes 60, 70% pullbacks. The volume's drying up, they're getting to key levels. I'm just looking for that reversal to get involved and take advantage of. MSTR is a little bit more of a subtle one, but we get this decent move. The volume's picking up a little bit, and then we just get this little pullback. It's putting in inside days. Now I want to see that 340s, 338 break and take it for a little move up. And I mean, that falls in hand with Bitcoin. This is a big level here, 92,000, and if it wants to sit around for a little bit longer, then maybe we get that little move on MSTR. And if it doesn't hit my alerts, I never even think about taking it or pulling it back up. And I mean, even something like DJT, so this is another one on watch into the 20th with Trump and the inauguration. This has just been consolidating for a couple of months now, and this hit my alert on Friday. And this is not necessarily, it didn't really make that big of a move. So that 2-day pullback or 3-day pullback doesn't really apply, but this is something that I believe may run. So this is just another one on watch as it breaks up through this little kind of channel. Then I'd be interested there.
Yeah, and I feel like in Judah, even names like what was it, ACHR. I feel like this is a good one to demonstrate how there's been a lot of these baskets running, but you could sometimes have a dip that is a little bit too large, and it could be a trend break instead of an opportunity to really buy some of those. So I think that especially on the short side, those should be some main watches. There's some of these sectors that are rolling over. You have things like SOUN. JOBY, like all these different sectors and themes, they're starting to roll over. If you look at the quantum theme, that is really like that shows you what can happen when they really roll over.
Yeah. So quantum, I mean, at this point, this is not even, I mean, it can bounce. You'd kind of want to, for me at least, I kind of want to see it just at this point, I'd probably be using, hourly levels. Like we could pull back, if we were to pull back Sava, for example, just because this is what like I kind of have in mind when we have that big of a drop off. But this was a huge move that came back. We get that pretty big drop off, and then I go into the hourly and I kind of wait for some sort of better setup or cleaner look. And as it breaks up, I mean, this thing ended up going up for like 300% from these kind of levels. So like using the hourly may be a little bit easier just to get an idea of like, now we're using the hourly instead of a daily, which kind of just has this right now, unless, we consolidate a few more days, we break up through, some key levels to the upside. But something like this, I mean, we could consolidate for a little bit and then have a second leg lower. I mean, these things are coming from some of these are coming from the pennies, and I mean, they're pretty heavy. The volumes, this is what I think shorts really needed, because like until then they weren't getting much. I mean, they were just grinding away, and this is it. Like, and even though these CEOs are coming out and saying, people are wrong, it may take us 5 years instead of 15, 30. It won't matter. People don't care. The move made itself, and no matter what the companies come out and say, it may still not round trip maybe, but maybe come back down to these prior levels where they consolidated the most. So maybe back down to the threes, the fours, some of them even lower, the ones and IO and Q. Like this is when I like to use larger moving averages as well, maybe the 50, the 100, 200, and see where they would support most. But things like this, not really, on my watch as much as something, like the robotics that are still showing some strength, or, even something like Fubo, which is just consolidating here. And this is like another one that I have on watch. Had that news with Disney and the merger kind of with Hulu. And now we're just consolidating, and the same thing, the volume's drying up, and we're putting in inside days. And this is something that I spoke about recently, but it reminds me a lot of Serve back here when they had the NVIDIA catalyst. Gaps up, it tries to make a second day, but just consolidates, and we could see the same volume pattern, the same situation where it's just, consolidating, and it's not going to be exact because, nothing's really exact, but we're kind of getting that similar type of feeling. So, I mean, if we start to trend and break 520, 540, and I like to use the hourly here as well to get some key levels, but if we start to like really trend and break and kind of build, then I think we could see something potentially, in my opinion, similar to, what Serve did. And maybe not, double like it did, but just have another type of breakout. The prior key that I'm looking at here is that 820 level. So I kind of want to just see that just continue its trend. I mean, it's a huge catalyst. It's the most volume this thing has ever had, even during COVID. And I think, there's potential. So if that decides to break those trend lines, hit my alert, starts to build and support, and volume comes back in and picks up, then I think that could be an interesting one as well.
Yeah. Definitely. And before, we'll still chat about a couple of these setups, but before we get into any of the main watches, I will give the disclaimer that neither of us are financial advisors. These are not buy or sell recommendations. This is all for informational and educational purposes. But Judah, I also want to, run a couple things by you. So, we talked about, kind of the strategy of trend continuation on the long side. So it could be a stock or a theme that's in play, and basically it, has dips along the way, the volume dries up, and then the volume comes back in a bullish way, and it bounces and either reclaims new highs or other things. So that's one way to kind of be long in, a market like this. And another way is, like you mentioned with the quantum names, it's not exactly like a regular dip buy, but you can have some bounce trades on things like IO and Q when they get oversold enough. And it's not because it's a trend continuation, on the long side. It's because when you get a move that goes down so far, so fast, and the positioning gets super bearish, a lot of times it'll just have like reactionary bounces that you can participate in, but you expect that bounce to eventually fail back down and then, probably continue lower. But, if you look at for a name that is really capitulating on the downside, and especially as multiple days go on, you can usually find a level to risk off of and maybe try a bounce trade there. And then I'm going to pull up my screen for a second because there's another name like SPI, which was a good example of a liquidity trap. And, we talk about these all the time, but this is another way that people who are more long biased can, be profitable in even volatile market conditions. Like on Friday, the market was down, 1.5%, 2% at one point, I think, and this was still doing fine. So this was a name that had a big run up. And, you can see the massive amount of volume, and that is really like the first thing that you need for a liquidity trap. And then you have a day or 2 days. It was 2 days in this case where, the volume just really dries up. The price comes down a lot and just goes sideways. And then we got to a Friday. The market was closed on Thursday, so it was a little bit extra. But and then on Friday, the volume came back in. This crept up, and then that was that squeeze out. And what is happening is that you have this first big day, and then you have all the short sellers who are basically looking for the gappers that they can fade down, and they find one, and it fades all the way down. But the problem is that it traded 150 million shares on that first day, and then the next day it was a couple million shares, and then by the time it got to Friday, it was trading like 1 million shares, and then as people are still in their short and they have to start to cover before the weekend, or as time goes on, they might get some callbacks for those shares. They have to cover. There's no liquidity, and that is that liquidity trap move. So that's another way that people can really, be profitable on the long side. And Judah, you have a lot of liquidity traps that you watch. So do you have any on watch for this week, or what do you have on watch for the week? I'll give the chart back to you.
Yeah, so liquidity traps. I noticed that you got to be a lot quicker to take profits there. A lot of times they'll just squeeze out those overstayers and just flip to the other side. I don't really have much liquidity traps for this week. I mean, most of them have turned into this other setup that I've been trading, but maybe one is HOTH. This reminds me of that one that you had on watch at one point, and it ended up running after hours. Where we had like 3, 4, 5 days of like that continuous,
Yeah,
like
and NUZE.
candles. Yeah, I think it was that one. Well, I don't know why I don't know. Is it even a ticker anymore? Maybe not.
Maybe not. I'm not sure.
But this like the volumes decreasing, getting lower every day. We had a 415 million volume day over here. They announced that they're not offering and they have cash, and that had a little bit of a reversal there. And to even start off for itself, this was down because they announced this PR when it was at around 115, and it was already down 70% by the time they came out with this PR. So something like that, I'm already prepared, and I know the action, and I played this bounce, and I believe I took it once it hit like 155 actually, but this was just something, I hop into the hourly, and this was the exact level that I had when they came out that PR. This was one major kind of area I put on just because of all these wicks up here. Obviously, another one's going to be this gap fill, and this is another one here. So I started selling as it was coming in through these gap down hourly highs, and then a little bit more over here, and then we get that right into the 279, and came back over. And I mean, now we're just same thing. This could either roll over or continue. I mean, the volume's now at 10 million from Friday, but something like this, like I'm generally not just taking it off open. I want to kind of see it do something first to confirm that that's going to be the turn, because not always do they work. So that's really the only one that comes to mind. Otherwise, I mean, we have the robotic ones that I was looking at, where the volume's very high, and now we're just starting to put in inside days or hit some key levels for potential reversals. RKLB, I'm just keeping on watch because of how well it's kind of tightening up and putting in inside days here. This is, if it continues to do this throughout whatever kind of pullback we have now with the market, then I'd be interested there. CRNC, so they announced something with NVIDIA last week on Friday, or almost a week ago, and this had a massive move, and now we're pretty much pulling back here off the tops, about almost 50%, and this kind of reminds me a bit like DXYZ back over here, where we get that huge move. It's not exactly similar. DXYZ had different catalysts with Trump, SpaceX. Elon had a multi-day move and pullback, but this pullback is what I'm looking at. We get that 4-day pullback into some keys, and CRNC is kind of doing the same thing. We get 4-day pullback, the volume's drying up a little bit. I kind of want to see this trend and reclaim 16 for some sort of continuation. I mean, I was in this on that Friday off open like sub 11, and I remember how it moved that day. It was like constantly
Mm-hmm.
squeezing. I wasn't prepared for it. I used levels back here to peel, and I peeled a little bit too early. But this move was massive. And it can roll back over right into these 10s, but I kind of want to see it reverse and potentially offer some little bit of a bounce there. OPTT is just a setup that had massive move and putting inside days and just consolidating. So could have another big squeeze out here, but something like this, I'd probably want to see a little bit more of a consolidation. I mean, if we go back, we could see, I mean, it's made some pretty decent moves in the past too. Like it came from 40 cents up to 7. I mean, these are way back during different times. So, but this is just, I'm looking at things that, and especially when the market's starting to roll over now, I look for things that are holding up better than everything else. Things, they're all going to look kind of similar, but battery name, I'm kind of just looking for some sort of breakup through this, trend line. The volume's slowly just drying out a little bit. We have some key levels here if the 2s can hold. Otherwise, if it rolls over, no problem. I move on. I don't even take it. FCUV. This is just a cheaper name that I may not have much interest in. I only am looking at because this 55 was key, and we're getting there now, and the volume's drying up. So if we could reverse and break back up through those 67, 70s, then I'd be interested. A lot of the lower ones here, like these, they're just kind of there as a more of a study rather than like I want to take them. I'd rather sit on the sidelines and see how they do first, and just put them into a kind of a study sheet that, when the time does come, then I know more confidently to take them. And then we have these two lighter names that, had a pretty decent move, and we're getting this 3-day pullback, a little similar. I remember this year, this was not the biggest liquidity trap type of thing, but it did squeeze out very nicely. And now we're just getting this pullback and the volume's drying up. Kind of want to see it, reverse if it's going to continue. Otherwise, I'll ignore it. And then just another sector before we finish up is the nuclear sector. And I mean, we had a very decent move. This consolidation was beautiful, and this breakout on Oklo was very nice. And this is pulling back a little bit, so I kind of want to see, what it does now. SMR and NNE. I mean, these are just consolidating well. It's if we zoom out a little bit more on NNE, I mean, it's just this is a wide range, but it's just been sitting in this range, and I mean, if it continues to hold and reverse, I mean, it's just waiting to kind of break out there, and OKLO with the nice breakout. I just kind of want to see these things either consolidate a bit more or reverse and break that upside. The thing with OKLO though, which could still work, was that this volume day was a little bit higher than the previous day, so it wasn't on that reversal watch just yet for me. And then NNE, I mean, we're just putting in inside days, and I mean, same with, or SMR is an inside day, and NNE, we're just hanging around. So this is just another sector to keep an eye out for. If this consolidates the whole time, or most of the time that, the market decides to pull back to wherever it does pull back to, then this could be a sector that, does have something. And CEG's in that same sector, which showed some strength on Friday with this acquisition news, and VST, I believe, is another one. And we have these larger cap names that, still are showing good strength. So this is pretty much what I watch now. It's just names that kind of, look like this, where they have some big move, and now volume's drying up, and it needs to pick a direction. And if it picks the direction to the upside, then I want to be there.
Yeah, excellent. Really great watches. And then, yeah, you brought up CEG and VST. And I know that those initially kind of ran with like the nuclear theme, and like they are related, but it's different market cap sizes. And they're more like the, AI needs a ton of power, and we need companies like this to provide it. And then they're doing deals and things like that. So you can definitely tell a lot of institutional money is still flowing into some of these things. Whether or not it makes total sense from an investment perspective over time, we'll see. But it's definitely been a hot theme, and you can see the relative strength. These names have catalysts, they have some kind of a hot theme, and so regardless of what the market was doing on the past week, you still had some names like that did quite well. So great watches, Judah. And then I'll pull up my chart, and I'm just going to bounce around for a few names because there's a lot of volatility in the market, and I'll chat about that for a minute. But a big thing that I really want to touch on was interest rates and bond yields. And I'll just do this really quick. And this is something that absolutely matters in markets. And we were doing a midday session in Investors Underground, and I was explaining this kind of in real time, where it's, money managers or asset allocators, they're all looking at where should we put money? Should it be into stocks? Should it be into bonds? Should it be into cash? Should it be into commodities? And wherever else? And they're always doing that calculation. And when you have bond yields or interest rates basically rise quickly, that a lot of times makes stocks less attractive, at least, the ones that are not doing that great. So you'll have money flow out of stocks. You'll have money flow into cash or to commodities or to other things. So as bond yields rise sharply, and that's just because the Fed is now not able to cut interest rates the same way that people expected them to with the latest economic data. So that's just something I wanted to touch on. You can see the inverse correlation with things like SPX. or SPY, and especially things like IWM are very rate sensitive. So as bond yields rise, a lot of times you have an inverse correlation with things like that. And one of the most sensitive sectors to interest rates is actually KRE, and that's the regional banking ETF. And a lot of times financials or things that hold a lot of bonds on their books, as bond yields rise, the value of the bonds drop. And so it's like if you had, let's say $10 billion worth of bonds on your balance sheet and interest rates rise a lot. Now it's only $7 billion worth of bonds, and they need all that collateral. So it's a very, leverage intensive industry. And so you could have some pressure in KRE, and I'm going to be watching that KRE and the other financials into the following week. Another sector that gets hit really hard by interest rates rising or by bond yields rising is real estate. And so you have like home builders, you have things like LEN, and a few other names too, but I'll keep it short just to, for the sake of keeping this watch list in check. But LEN is another name that's had a lot of pressure on the downside. And just like how Judah's talking about, these periods when you're trading something long, you're looking for a kind of an overall trend, some kind of a catalyst, and then, dips along that trend to kind of enter, and then it breaks up. And it's the same thing if you're doing that in reverse, where you're looking for, spots to short or to use put options in my case. So you're looking for like a trend that's kind of in play, and then you have, bounces or things like that, and then you'll just have the next leg lower. And so you're looking for consolidation point breaks or things like that to really participate in some of these moves. And then I'll just touch on the quantum theme super quickly. We know what happened with that. Basically, the CEO of NVIDIA blew up the sector, saying that this crap's not useful for a long time. The CEOs who get paid by stock incentives and everything are, of course, arguing the opposite. But the chart speaks for itself, and so you'll probably have some capitulation moves and bounces pretty soon on some of these. But that is kind of what a sector looks like when it breaks, and so the quantum sector has broken. The leader in that is still IONQ. That's the strongest name. Then you have kind of the worst names like QUBT or other things that will likely make just a full round trip at some point this year. Relative strength, LNG. So another, I was talking about like where does money flow to, and commodities and natural gas and oil, those have all been perking up. So some names that are involved with natural gas and energy have definitely been showing relative strength. So just like we talked about, firm trends in place and looking for spots for either participating on some of that or after some of the dips, but you can participate in multiple ways on the long side there. And AR is another one that kind of fits that bill. And then even in the small caps, there's names like CGBS, which has to do with that. And Judah, I could actually see something like this popping up on your radar at some point too. So I would have people to keep an eye out for some of the smaller energy names if those come back into play. And then more relative weakness in the AI space is you have things like ON. AMD just looks horrible. And it has been, for quite some time. It's been on watch. And then this was a new sector that has been popping up on my radar.
Chris, before you continue, AMD, people, may be asking, like, when do you look for the bounce here? But we could see how each day that's pulling back, the volume's just growing and growing. And
yes.
That's not, something that I'd be watching for because it shows more, weakness each time it goes. But if you go back to AMD back there in November, you could see, the volume is kind of decreasing, and then you get that couple day bounce back into some, even a little further back, right where the M is. Yeah, that pullback.
Yeah. And so just like Judah is saying, it's different points in a trend. If you have something that's still kind of deciding what it wants to do, you can have some really nice bounces like in that indecision. But once you start to have a very large trend on the way down, the edge usually becomes, looking for pops like this to participate on the downside and up here again. So a few more names. And then this was a new sector that popped up on my radar. And it's kind of like the alcohol sector. And you had STZ report earnings. Constellation, they own a bunch of stuff. I think they own Corona and a few other things. But they're saying that a lot of alcohol sales are down. It could just be, consumer behavior changes, things like that. So this is another sector with BUD and Constellation to have on watch for possibly some more downside as a theme this year. And then EIX, so you have the California wildfires, and you have companies that are either related to that, like some of the power providers out there. Like a couple of years ago, you had a big issue with PCG and, wildfires, possibly, people suing them or them being blamed for starting them, which again, it probably didn't happen that way, but the stocks trade like it. And then you have some of the insurance providers out there also, like Allstate and things like that, which are also definitely trending down with some of those themes. So I more just wanted to put a bunch of sectors and names on people's watch lists for the upcoming week. But again, I will be watching interest rates and a few other things to really just keep us on track in the market. And then I'll make my watch lists and plans more detailed as we approach those days. And then, so before I touch on the final part, Judah, any thoughts on any of those sectors or any comments?
Nope. Looked good.
Yeah. And then the last thing that I will bring up is we are running that trial sale in Investors Underground. So, people come to us all the time. They love the community. They love the tech. They want to experience it. They're not sure if they should do like a full trigger pull yet on a subscription. So every now and again, we'll open up a trial so that people can basically get access to everything inside Investors Underground. So it's the watch list, the morning broadcast, the midday study sessions, all the tools, the live calls, trading alongside people like myself, Judah, Nate, everyone is in there. And these are the environments where you need that kind of community to really do well. And you have all the best tools, the best AI news scrapers and things like that. So we are running that deal. You get access for 2 weeks for $49. That is a very low cost to try something like Investors Underground. And I think that this is something that people should take advantage of. And, if you look at all the things that you're going to spend $50 on over the course of this year, I think that this could potentially have probably the highest ROI on that. I mean, you think about it, you are trading with people, you're learning setups, and you're doing things that if you're going to be trading for a number of years, you could have, tens of thousands, hundreds of thousands in some cases. People make obscene amounts of money mastering strategies that they learn in Investors Underground. So if you are looking at the downside and the upside of what that could potentially be for you, I would definitely say that it is worth it. And we hope to see you in there. And we'll have links in the description for that deal. But Judah, thank you very much for joining me on Scan this week. Yeah, we covered a lot of great topics.
Yeah, we did.
And
thanks for having me.
yeah, of course. And we will see you in the room this week. And hopefully we will see a bunch of new members as well on that trial period. So have a great weekend, and I'll see you tomorrow in the room.